Once again, guys, you're welcome. We are back again on our charts. So I believe this is where we left off last time, right?
Yeah.
Okay, so we're talking about the moving averages, and this is what I was teaching you, that you have to understand something. The bigger the moving average period is, the bigger the trend. Yes, is the bigger the trend. So this is what we call trend trading. The advantages of trend trading is that when you are trend trading, when you trade, you move with the trend. You don't just trend, because one thing that you have to avoid on the market is going against the market. So when you are trend trading, you are trading with the market. And when you are trading with the market, it means that you are trading with banks, you are trading with big institutions. Okay, that is the advantage of trading with moving average trend trading style. So then, now that you have a trend trading style, there's one thing that you have to be able to do, is to develop a strategy from it. You have to learn to develop a strategy on it. But I think developing a strategy on it, it is something for another time. It is something for another day. Can you hear me?
I'm listening.
Okay, no, I was testing my internet here, was saying your internet connection is unstable. So I was testing. So now I want to teach you about the final thing before we go far, because now I've been teaching you about indicators and how you can then use them to own advantage. So I think maybe on moving average, I can just try to show you something. For instance, we have got this it's moving average what? This one is average what? 200. So I want to teach you something. Why I say you should pay attention to your settings. So this moving average 200, we do like this. So you see, this is the same moving average, but now what is separating it is the shift option. Okay, can you see that? Okay, so which means the shift option, it also plays a role. All options, they play a role. So what if this was moving average 50 and shift 50, moving average 50 and shift 50? So I want it to be minus 50. Okay, so if you check right now, you can see something. Let me remove this one. They've saved the purpose. Now, if we do it like this, okay, let us return. I'm trying to find one that is more interesting. You understand? One that is more interesting. One that is more interesting. Okay, and this one now, the other moving average have completely disappeared. Okay, let me see. So this is the green one. The blue one, what happened? Let me do this. Okay, so unfortunately, it does not really display what I wanted, but you can see something here. Is that now, if we were using this 200 minus 200 line, it means on this one it was going to be a sell. Am I correct?
Yeah.
But if we're using 200 with shift 200, it means on this one it was going to be a buy. Using line 200 buy, line 600 is green. And guess what? Both of them are correct, because If we're to use the blue one, it means we're going to start from here, and there was a buy from here to here, isn't it?
Yeah.
There was a buy, and this is how many pips? This is how many? It's how many pips? 165 pips, right? Okay. And then if we're going to follow the green one, let us look at the bigger sale here, which is from there to there, which is 60 pips, right? And now the blue one says buy again, and we could have bought it for this 179 pips, right? So what am I trying to say? This is what I'm trying to show you now, is that no matter the average, you always get a signal from it. But one thing that you have to master is to make sure that when you get a signal from it, do you master the strategy? How familiar are you with the average? Okay, guys? Yes, because this is what happens. This one is saying buy, this one is saying sell. Which one are you comfortable with? Are you comfortable with buying, or are you comfortable with selling? That's why everything is very important. As a forex trader, you have to be quick in your decision making, and let your decision, let your yes be your yes, and let your yes be, let your no be your no. Now the problem for most people, it begins when they want to mix these two things. One secret I want to tell you: don't make sure that you don't mix these things. Don't be greedy. Okay. I know most people, what they want to do is that they want to take the buy here, and then they want to also take the sell here. It's good, and they also want to take the buy here. It's good, but it is very dangerous, because if you are going to do like that, if you check here, there is a sell, but the sell is very small. So the moment that you are going to take the small sell, it is going to frustrate you, because then it is going to buy again. Can you see what I'm talking about? It buys again. Right, then it tells you to sell, you sell again, you take $2, then it buys again. So now this is what happens. The reason why the market will be doing like this, sometimes, often, most people, they call it stop hunting. Okay, yes, they'll be doing a stop hunting for you now, because they will know that the moment that they tell you to sell, the problem with you is that you see the signal late, you take the sell here, and you put your stop loss here, it buys. If you check, it was just going slightly above the last. You see, check now here, because they know that most people, they put their stop losses here. You see, then they tell you to sell again. Now your stop loss is hit, you take it again, but the problem is that you're going to set a pending order around here. It gets triggered, and then they stop you again, they take you up to here. You see the problem now, and then finally they sell. And now on this sale now, you won't take it, because you'll be saying that now the market is playing mafakala with me. I'm done, I'm tired. So you won't take it, and then you'd have lost money. Simple as that. And now they will know that when you love money. You love money. So this is what they do. Let me show you. It's very funny how the market plays with your emotions. It's very fun. They know that you love money. When you see the sale coming like this, then you say, now it's falling now. It's falling now. Then you take the sale here. You take it around here. When you see this smaller nyana pattern, you see? When you see this smaller nyana pattern, you take the sell there. Then when you take your sell there, it goes up, goes way, way up against you. But now, if you see something now, the one who was using the blue line will be seeing a buy signal, and the one using the blue line will be buying by that time, you see. So now you see something. If we're going to use the CCI, then your deep sell was here, and you could have sold up to around here. It was permitted, you see. So now, if you are using the green one, it means that your buys will come, your sell was going to come from here. If you're using the blue one, your buy was going to come from here. You see, so it means that the one who's using the blue, he doesn't sell, but he only buys. And the one who's using the green one, he doesn't buy, but he only sell. You understand now the secret of trend trading? If you are buying, you are buying. If you are selling, you are selling. But now the problem comes for you as a trader. The moment that you want to buy and sell, if you are trading, it becomes a problem. Why? Because you're going to buy into a pullback and you are going to blow your account. Okay? All right. So now I want to introduce Yellow.
You must make a decision whether you want to go for
Buy.
a sell or a buy.
Yes. You don't have to do both things at the same time. You don't have to look for both signals. If you are buying, buy. If you are selling, sell. Because one thing that you have to know is that the market moves in 3 directions. The market moves upwards, the market moves downwards, the market moves sideways. So now for the market to move sideways, even upward, it does not go in a straight line. The market wanted to buy from G. But now first it had to give this one wave, like this 1, 2, and 3. Because the market can't just go. And if you check now, I want to show you something. Do you see now? Can you see something on the screen? We have put Fibonacci, right? Yeah. From here to there, do you see where the market last retraced on?
Yeah.
50.0. So now, you remember we said that our exit points, they are 50.0, 61.8, and 38.2. Those are our 3 take profits, right? So it means take profit 1 and take profit 2 was hit. And then on the, I did not hit the 3rd one, you see, but then it went up again, you see. Yeah, so now, do you also see how much Fibonacci, how powerful is Fibonacci? Can you see that?
Yeah.
It's very powerful because in forex trading, you put it anywhere you want. You include it anywhere you want. Your first take profit is 38.2. Your second take profit is 50.0. Your third profit is 61.8. Yeah, those are the levels that you work with. So you see that even if we are doing sentimental trading, even the technical Fibonacci is also included. Did you notice? Yes, Ra. Yes, Ra. So now, you have to be decisive. Do you want to buy or do you want to sell? When you make a decision, stick to it. Let me tell you, many people, they ask me, why you are good, but why is it you were late to make money? The reason why I was late to make money is because of indiscipline. I was an ill-disciplined trader. Why do I say that? Because sometimes I could see that my strategy is not telling me to buy, but I see a buy on the market. Then I'll take that buy. Never commit that taboo. Never make that error. If you are buying, buy. If you are selling, sell. Don't go against your strategy. I'm teaching you this because what I'm going to give you is a very important thing. If you don't follow what I'm teaching you, then you will never make money with it. Don't go against your strategy. Respect it. Respect it. Okay? Yes. Stay loyal to your strategy. Stay loyal to your strategy. Remain loyal to your strategy. So now, without wasting much of your time, I want to teach you the last thing. And then we'll know that the foundational class we are done. We get to use strategy from tomorrow. We'll be trading with use strategy. I'll be teaching you how do you use it, how is it used, so that you can see how powerful it is. Are you ready? Are you excited?
Yeah.
That's good. I'm happy. So today I want us to talk about the Bollinger Bands. This is the last indicator that I'm going to teach you about because this is one of the last important ones. The Bollinger Bands. Now it's on period. Let us put it on period 34. Deviation, let's put it on 1.619. The Bollinger Bands. These ones, they are used to measure volatility, market volatility. They are used to measure what?
Market volatility.
Yes, they are used to measure market volatility. Market volatility, it plays a vital role in the direction of the market. These bands, they are widely respected worldwide. They are used by most traders. You know, one thing about them is that they tell you the direction of the market. They tell you also if the market is exhausted. They tell you if the market is exhausted. So First is that the market is exhausted. The moment that the market breaks out of the Bollinger Band, remember a rubber band. What do you do with a rubber band? You pull it. The moment you pull it, it then pulls you back. Am I correct? Hello. Jesus. Hello. The moment it's like an arrow. The more you pull it,